Mr. Linus, you there? What do I have going on here? Hold on. Say it again.
Can you hear me?
Yes, sir.
Awesome. We're recording.
We are recording. We are live on YouTube Live. We are live in the Discord. We are live everywhere.
Cool.
So,
All right. Well, do you want to kick this off, go through your charts and stuff, or do you want me to
yeah, I'm
go
not.
through?
Yeah, I'm not going to go through dig through a lot of charts just because of all the activity we have going on. I wouldn't mind sharing just this spy chart real quick. It is. Let's see here. Oh, let me set scene two. My bad. Well, I don't know how to do it. Give me 1 second, Linus. Technical difficulties.
No problem.
Share your screen. All right, can you see that?
Yes,
Awesome.
I can see it.
Awesome. So yeah, just been kind of playing around with SPY a little bit, looking. You can see if you go to the daily chart, you can see it a little better. You go to the daily chart, you can see we kind of had a little bear flag working here, right? At the bottom of this channel, or at the bottom of this
Yeah.
wedge, actually, this rising wedge, which you would expect to fall down through it. But you go back down to the hourly chart, and you can see we're actually broke below it tonight, which
Mm.
is a big thing. So interested to see if it's going to bounce here on this wedge right here. If it bounces there, we might get back up in the channel. If not, we could have a very interesting day tomorrow. So this is going to be my top watch tomorrow. Honestly, I'm gonna watch SPY. I might watch IWM a little more tomorrow. Typically, if we get a slower day on some other things, a lot of your small cap stuff might actually pop. So main focus is going to be SPY, IWM, and then I'm looking at CAT, maybe the short CAT tomorrow. So just those three. I've got a long list of stuff. I'll post all these charts and what I see in the watch list channel later tonight. But I don't want to go too deep into it now. Then post everything back there. But I still got a little work to do on a few of these charts. But that's kind of the three main ones I'm gonna focus on tomorrow: SPY, IWM, and CAT. I think CAT's got a nice, and I'll share it in a minute, but or later tonight. But CAT has a very nice gap below that we might can get back down to. So definitely going to be high on my watch list tomorrow. So yeah, don't want to drain charts too much. It's more CPI data and FOMC this week. That's kind of going to drive what everything else does. So Linus, I will turn it over to you. I'm going to stop sharing,
Okay.
and
Let me.
then you should be able
Go.
just to share your chart or you share your screen.
Yeah. So I'm gonna go. I'm gonna start with my usual rundown of the week. So yeah, we'll just get started. So Monday, looking at just fundamental data here, not looking at any sort of technicals just yet. So running through the schedule. Monday tomorrow, we've actually got GDP numbers coming out late, early tomorrow morning, late tonight, for the UK. So that will have Dixie implications. But tomorrow to me is nothing more than a set up your plays for the week day. I know I've seen a little bit of chatter on FinSwit already tonight, and tomorrow could be a pretty big day or things like that. I'm actually not anticipating that, um, but that'll be more on my technical side of things. So Monday, kind of a wait and see. Tuesday, obviously the big boys in the pre-market of CPI data. We'll go over a preview of this as I circle back around. But obviously Tuesday, huge data at 8:30 in the morning. Wednesday, we actually have some sneaky data coming in prior to FOMC from an international standpoint. You have the UK's inflation rate coming in. Excuse me. So basically, think of the international data this week as being one day behind the US data. So US has inflation data on Tuesday, UK has inflation data on Wednesday. Our FOMC interest rate decision is on Wednesday, and the UK and EU's interest rate decision is on Thursday. So again, it's probably not going to matter too much this week, but still good things to know. Obviously Wednesday, as we move down, that's the big FOMC day. And again, the big change from this FOMC meeting from the last one is you're going to get those economic projections at 2 p.m. Last time we got these projections were in September. We did not get them in the October meeting. The November meeting. So just keep that in mind as if people are trying to persuade you into saying what we did the last FOMC meeting, et cetera, it's irrelevant. This one comes with major data at 2 p.m., not just the interest rate hike, which everybody pretty much is unanimous on a 50 basis point rate hike. So nothing will be kind of a surprise there. Always a slim chance that Jay Powell does surprise you 75 basis points, but it's just not. He hasn't done it, so I don't expect him to do it now, to just do some surprise rate hike. But again, could happen. Not likely though. Thursday, you get kind of the aftermath of the FOMC, but then you get all the global interest rate decisions coming in from the UK and the EU. And then Thursday morning, you have retail sales for the US. Initial jobless claims also come in. Not expecting much from the initial jobless claims, but I am expecting some sort of reaction from the retail data. Then we move to Friday, and you get retail data for the UK, and you get PMI for the US at 9:45, and you also have monthly options expiration on Friday, so you're gonna have some volatility, quite a bit. So looking at pretty much every day this week except Monday, you've got something on the calendar that can move the markets. But of course, everybody's eyes are on CPI and on FOMC on Wednesday. So I'm gonna actually shift over to my preview to kind of go over my thoughts on the CPI for Tuesday. So Trader Nate did a great tweet. I posted it in the chat. I've also posted it in my preview, breaking down the previous month's CPI and how the markets moved with it. And it's just kind of a cool data spreadsheet. If you're interested in that, I highly recommend taking a look at it. It's here at the bottom of my preview. But again, kudos to him for putting in that work. And I reached out to him, asked him if I could attach it. He said, go for it. So there it is. CPI is rumored to come in lower than the previous month's cooler reading. So if we look at let me pull this up real quick. I'll zoom in. So if we look at his spreadsheet, you can see that CPI's headline number was 8% estimated last month, and it came in at 7.7%. The core was estimated at 6.5% and came in at 6.3%. So that is why you got a 20-point move on the CPI last month, because it came in cooler than expected. There's a lot of theories going around of why that happened or what have you. However, very, very interesting note with his spreadsheet that we're going to watch here is, so this December reading is estimated to be a 7.3% headline number. So that is 0.4% lower than last month's reading. And the core is supposed to come in at 6.1%, which is 0.2% lower than the last month's reading. Now, if we look at his spreadsheet, and we'll start with headline here, you can see that 8% 8.1%, and sorry, we'll start with October or August. So the estimate was 8.7. We came in at 8.5. Then September, the estimate was 8.1, so 0.4 down, and we came in at 8.3. So we came in hotter on the September reading than um, in August. So then let's go to August on the core. Was 6.1 was supposed to come in, 5.9 came in. Then the next month they said we're going to be flat at 6.1, and then 6.3 came in. And then the following month you see 6.5 was the estimate. We came in at 6.6. So what's important here is looking at a spreadsheet. One thing that really just came out to me is you haven't had consecutive months of a lower expectation reading on any of the headline or core. So you could possibly have that in this report coming in on Tuesday. So let's switch back to my preview. Looking at that, so we're going to basically just concentrate on core. I don't really care about headline. As you guys have seen, energy prices have kind of gone way up, then way down, they've crashed. Headline is not what the Fed is monitoring. The Fed is monitoring core. And the only reason we really care about inflation, amongst obviously all the obvious personal issues we have with it, but the Fed's reaction to inflation is what the markets are most scared of. So, and the Fed has said they are concentrating on core, which excludes food and energy. So let's just kind of go through it. And the major reading that matters is core. It's set to come in at 6.1% compared to last month's 6.3%. So it's pretty simple. There's three options. If core comes in below 6.2%, this will be bullish, in my opinion, to the markets. The data backs up that Powell's aggressive moves are working, albeit slowly, towards lowering inflation. So you're going to get a positive move in the markets. Core comes in at 6.2 or 6.3. This will be kind of an initial bearish move because we came in above expectation. But then I expect us to get a bullish recovery because we came in below the previous months. So it'll be another kind of sticky core situation. But again, doesn't really favor the bulls, doesn't really favor the bears, just kind of says, okay, we got to wait another month for a better reading. Similar to, I noted here, similar to what happened with the PPI on Friday. Outside of that last 30 minutes of the day, you had a, pretty flattish day overall. Now CPI, you'll probably have plus or minus 2 points, but if it comes in confusing, the market will act confused and just wait till the next catalyst, which just happens to be the next day with FOMC. Core comes in above 6.3. This is going to lead to a sell-off in the markets, and that would mean that the bullish CPI report from last month can be treated as a one-off. So to me, CPI is always a strangle opportunity, so I will be playing a strangle. I'm not going to do a futures one just yet, Monty. I'm just not quite there yet, but I'll be doing my regular $2 out of the money if you do SPY, and then 20 points out of the money if you do SPX, and probably entering at 3. And if I'm profitable before the close, I'll close those out and rebalance, and then sell at the open. Not looking to see is CPI being a trend switcher with J Powell set the next day. So that's my CPI outlook. So for Monday, I'm looking at entering that strangle position at 3 p.m. I may do some scalps here and there, especially if the market gives me a direction. It'd be foolish to ignore it, but for the most part, I'm going to keep it light with my strangle and just play my regular CPI. No core puts position, no bias towards any side, just playing both sides equally. Moving on to FOMC preview. So this is where I think the fun really begins for the week. And I think CPI will get a lot of attention, but I think FOMC has the potential to really hurt a lot of people if they're not paying attention. Again, if you're a day trader, scalper within 5-10 minutes and stuff like that, this is extremely volatile price action that we get with J Powell. you guys have seen probably me enough times with JPAL how I trade it. I operate in first, is this a meeting with JPAL where data gets released? That's not just interest rate hikes. And the answer to that is yes. We have the economic projections. So to me, the data rules first. And then I listen to JPAL for his mannerisms, his tone, his speech, his bullish buzzwords, his bearish buzzwords, whatever he does. And it's pretty clear now to me that I've kind of identified a little bit of a pattern with JPAL in that when he has data come in that's negative, he tends to be more dovish. When he has data that doesn't come in with him, he tends to be more hawkish. So the Brookings Institute last week was one of those moments where he was kind of just using bullish buzzwords, and everybody was a little confused of what happened to Dr. Doom that came out the last 3 months with these speeches, and he came in so calm, cool, jovial, laughing, just very, very odd. And that led to a lot of people to wonder, like, what the hell just happened? And I think, this is my tinfoil hat theory is the next day you got a very, very hot jobs report. Or sorry, the next week. Was it next week or next day? I don't know. Regardless, you get very close to it. You get a very hot jobs report. And no, it was the same week because the speech was on Wednesday, the jobs report came in on Friday. And it came in very, very hot, and it moved the markets negatively. So, did he know about the jobs report and therefore was like, I have no reason to be Dr. Doom because the market's about to get a wake-up call on their own without me, so I might as well pump it up so we can stay in this channel. And we'll look at the channels when we go into the charts. But again, that's conspiracy theory, that's tinfoil hat stuff, but it is extremely important to know those types of movements and mannerisms and buzzwords when JPAL is talking because they do move the markets quite a bit. So I fully anticipate JPAL. This is what I'm playing for FOMC. I anticipated 2 p.m. the economic projections to come out, and they will come out in this PDF, and you will see the number to watch here is going to be this Fed funds column right here, so at the bottom. Fed funds for 2022 was 4.4, 2023 4.6. We are currently at 4%. If he does a half rate hike at 0.5, we'll be at 4.5. So for all intents and purposes, the Fed will hit its projected funds rate for 2022 year end, which they had at 4.4, they made it 4.5. What everybody, and I mean everybody, is going to be looking for is 2023, the year end rate. Because as you can see, it's currently 4.6. So if that number is not above 5 or 5.5%, or 5.25%, you will have everybody screaming Fed pause within the next, by March. So everybody's going to be watching that 2023 number. And if it's below 5%, just buy calls because it's all going way, way, way up just based off of the euphoria of the market moving on from the Fed fears, which leads me to my next theory. But so you're going to want to look at that. This drops at 2 p.m. What happens when 2 p.m. fall drops? You probably get a negative move on that economic projections based on the data. Odds are we're going to be above 5%, which is bearish. And then you're going to have JPAL take the stand. And this is my pure guess. Do not take it for any more than that. I think you're going to get a repeat of September where JPAL was using very, very bullish buzzwords. And the economic projections were so bearish in their updates from the last projections from June, and that he was talking bearish but using bullish buzzwords, and the market actually was eating it up. It ran all the way up to 388, 389. And then once he stopped talking, and towards the end of his speech, the market started digesting those Fed funds rates, and he didn't say anything that was actually very bullish at all. And we had a quick 12-point drop from the time he's middle of his press conference till the close of the day. So a lot of people got faked out. A lot of people got, you can't just follow the price action in those moments. You have to understand why the market is moving up and what will it take for it to keep moving up. I had one of my best days trading off of the JPOW in September, and I fully anticipate to be a similar event where he basically talks the market up, and then the market realizes that, oh shit, this is bad, and goes reverse. So how I'm playing it is I'll be entering a strangle heading into FOMC 2 p.m. I'll hold my strangle for Fridays, and what I'll do is if we get a drastic drop on the data, I will just close out my put side, and if JPOW doesn't, talk us up and moves us up, then I'll just close out the call side, and I'll re-enter my core puts position as we test those key levels on the way down. But I have to see a reversal first, because there will be a move up in the when he talks, especially if he kind of keeps up with the Brookings Institute talk that he did last week or 2 weeks ago. He's gonna use those bullish buzzwords. So that's my main target. Now, let's say the market doesn't sell off after Jay Powell talks and they eat it up and they like it. Well, you just ride the wave up with your call side of your strangle. That's what I'll be doing. And until I get a reversal signal, I'll just ride it up. I mean, I know where we're headed. I know that this is the end of the inflation trade and the start of the recession trade. There is this one blow off the top. Did that blow off the top happen last week when he was talking, or a couple weeks ago when he was talking at the Brookings Institute and we tested 410? Probably. But this is the last major FOMC event until February. So it is extremely, extremely important to understand what he says and how the economic projections come out. And if those can kind of lean us in one trend or the other, you're just going to ride that trend until the market absolutely switches over to the recessionary theme. And that is when things get kind of nasty, unfortunately, for the markets. So, to me, there's not really much point to doing much of a preview beyond Wednesday, because it's all about the data on Tuesday and then the data on Wednesday with the CPI and the economic projections. Do not, you could get a pop off the 50 basis point release as well, where the market is like, oh, we only got 50 basis points. But if those economic projections are 5.5 or 6%, you can't help but know that any pop is going to get faded, because that just means the Fed is nowhere close to stop raising rates. So what I'm going to do now, sorry if I'm a little under the weather, sorry if I've been switching up my talking. So I'm going to look at the charts. This is daily for the SPY. Everybody knows the 200-day moving average trend line. We tested it, broke under it, yada, yada, yada. What I really want to focus on is this going to get me there? Okay, yes. September 21st, which is right here. This is JPOW on the economic projections. So as we're leading up to his speech, we were at 387.33. Now, 2 p.m. hits. We always have a major candle fall and then it recovers. But I don't have a 5-minute chart here because I'm not a psychopath like mine. But the 380. 387 open and then 380 low, and then it closed at 382. So there was a 5 point drop on the 2 to 230 candle. Then you see it roar back up the next 30 minutes, and this is when Jay Powell was talking, taking talks. And I remember vividly talking in the Discord saying, he is saying bearish stuff, but keeps using these stupid bullish buzzwords. And those buzzwords you're going to want to hear him say. He's going to basically say soft landing, that there's still a chance for soft landing. He's going to say that we're going to be monitoring, that we've done enough. We don't want to over tighten, right? He's going to say those types of things. But meanwhile, his data at 2 p.m. is going to say, I'm going to keep raising rates at least 50 basis points for the next 3 meetings. So get over it. So we have to be mindful of that. That's what makes that 2 p.m. projection so important. Then you can see the next candle at 3 to 3:30. It is what the market then realized, oh no, this data is bad. And as you can see, that trend happened the next day. We were flat, we gap down, then flat, and then the next day gap down. And then we were all the way down to 350. Let's see. Oop. And it wasn't until the CPI reading that actually came in hot in September. That's when we got the huge gap down in the CPI, and then this. I don't know if you guys remember this, but I vividly remember this. A damn near 20-point 2-hour jump we did from 365 to 348 to 365. When the market was just like, okay, that's enough. We're bouncing here. So, but all that pain, that's 30 points from the peak of J Powell, 40 points from the peak of J Powell to the bottom of the CPI report. All that came just based off of the economic projections. And then, of course, you got some little bit of hotter jobs numbers that came in that didn't help the situation. But this is what you can anticipate. I mean, if you can show a 5-minute chart, Monty, I don't know if you're up for that, on the September 21st, that would be probably an interesting one to say, because again, this was the last FOMC meeting that we got these economic projections on. So it is kind of apples for apples here of how the market reacts, given the set of data that we've gotten. The last FOMC meeting, we did not have the projections. And that's when, he was very Dr. Doom here in the, I guess that was November 2nd? Yeah, November 2nd. And that's when you got a big candle up, 2 p.m., and then he started talking and he was just like, no, you guys are moving up way too much. You're premature and you're paused. But as you can see, without the data backing up his statements, it didn't take long after for us to rally up, and then obviously the CPI helped immensely. And then this is the Brookings Institute. So here's the big CPI jump. This was at 11.9, and then it rocketed up 20 points. So this is a major gap that I think everybody's looking at, this CPI gap. Doesn't necessarily mean that CPI has to be the one that fills the gap on the downside, but it is something we're looking at, and that gap goes from 373 to, or 375 to 388, so 13 points right there. And then obviously this was the Brookings Institute where he just sent it with his dovish commentary. And then the gap down, you got here on the 1st, this was the jobs report. And as you can see, it recovered it all. And then we've been kind of just selling off last week, all week. But one important thing I want to show is, actually, I want to do a daily, I'm gonna do a daily on the month, just a simple one. Oh, not monthly candle. One second. Day and month. Okay. Wow. Well, we'll zoom in. So as you can see, we've kind of just been in this chop box. Low of 390, high of 410. So I fully anticipate that we actually break out of this channel this week. Um, and there could be a situation where there's a bit of a pump fake. So just be cautious of that. But I believe we are going to break out either below 380 or above 410 this week based on the data mixed on the news. So I am not entering any core positions until after Wednesday. I'll be playing Strangles for the Tuesday data and for J Powell on Wednesday. Obviously, I'll be live chatting during J Powell to kind of give you guys my thoughts as he's talking. And I encourage you guys to do the same. You know, listen to him, learn, just know. You know, don't necessarily look at the market reaction as it's talking because that can really mess you up. Because he can say a word and we're moving 2 3 points in either direction. Understand what he's saying. Understand, trying to figure out what he's trying to say, and also keep in the back of your mind and study that projection data. Go to the FOMC website, study the projection data for September, see what it did in June, see what it did in March, because all that thing has done is kept updating upward this whole year. So the minute it stops updating drastically upward from the previous projections, you're gonna get a positive move in the market. So the moment that happens, you want to know right away what to look for. But if that 2 p.m. data comes in hot and it's, you know, a bearish data read, then you know, okay, I'm gonna ride the rip if J Powell decides to do it, or I'm gonna look to enter puts if J Powell kind of confirms it, or I'm gonna just wait until the market realizes what it's going on and then buy puts at core levels. From the upside standpoint, obviously, if the Fed becomes dovish, does not decide to hike as much into 2023, the market will have an insane reaction to that. And this will be the blow off the top of the inflation trade. And this is where you can see 410, 420, 430 type moves into the end of the year. So that is also a possibility. And, you know, if you're J Powell and you kind of think that you've done enough, you know, whether that's because of CPI reports come in negatively or that the economy itself is starting to slow on its own and doesn't really need your help right now, then you can see the markets kind of blowing off the top and then shifting into a recessionary thing that basically maybe kicks off when earnings start coming out the start of the year, the first quarter. So, got to be nimble, got to be patient, and just know that both sides can be right on this trade this week. But you just make sure you're hedged, make sure you're not heavy in anything, you're going light, you're not biased towards anything because you can get your head ripped off pretty fast. So that's all I've got for this week. Hopefully that answers quite a bit of questions. But if you guys have any, feel free to take on. Bonnie, are you familiar? You know, what is your take on some of the things I said, or do you have any opinions? Or
No, I mean I tend to agree with you. I think we're getting. I don't know. It's just once you start leaning one way with J Powell, you know you never know what you might get.
yeah, it's a painful lesson that I've learned.
Yeah, and I was just looking at the that 5 minute chart. I was going back and find it from last that September FOMC, and yeah, it was something to look at for sure. My gosh, I remember, you know, if you remember correctly, you know, we were sideways pretty much
Yeah,
that whole day. Then we got the release, and it tanked down on the release, and then he started talking, and we got that big spike, and then like you said, when he got done, it was just downhill the rest of the day.
Yeah, and I remember being super aggressive and also slightly annoyed that he kept using those bullish buzzwords. And
Yeah.
I remember buying puts heavy actually for the following weeks and it working out for me. But it's, you look at a price action from a TA standpoint, you could have gotten eaten alive there because you talk about engulfing candles. It's all over the place.
Yeah, and actually, kind of looking back, it played out better than I thought it did. I remember that was one of my bigger days too when I first, that one. So it, I would share. I'm having issues trying to get everything right. Let's see if I can share this real quick.
Here, I'll stop sharing mine.
Let's see. Doo-doo-doo. Oh,
Yep, I can see it.
okay, good deal. So yeah, I mean, look, you can see right at 2 p.m. Central, we had that announcement, right? We tanked, popped back up. We had that first initial move, then we caught back up. I'm wanting to say when I played off J Powell, I played off when he here, and then I played back off this bottom here and rode it back up. It's kind of how I played it when I went with calls on that side. Uh,
Hmm.
I'm trying to remember, was I trading? I don't think I was trading futures back then because I know it was buy I played off of. So, yeah, this is I mean, you talking about a perfect scenario if you just get on one side and ride with it. My gosh, that's a
Yeah.
you can't beat that. I mean, look, here you got this big drawdown, then you got the pullback, right? You got
Hmm.
retest and came back down, and then you did the same thing back up here. You actually did it a couple times. So,
Yeah, what's interesting to note is that you're at slow people time. So you can see when he started talking, yeah, you had the spike, and I'm assuming he got done right about where your cursor is.
I was wanting to say it was like right around here because it was
Mm.
about. I want to say he did 25 minutes, 30 minutes, and then he got. This is where he got done talking, and then it started just tanking down the rest of the day.
Yeah, yeah, I think you're right. And I actually anticipate that not. I mean, it could happen just as fast as that, but I think you may get an overnight kind of move down or a delayed reaction to him. Just especially if he is dovish, because that would be two speeches in a row where he's just a little bit, kinder, gentler. J Pal is that fund manager that Maverick likes to make fun of, and it's a it, yeah, you just. But let's look at it from just an objective level. If we were playing levels on this chart, you got your reversal confirmation. Um, what? Yeah, yes. Obviously, in 5 minutes, a little bit easier. But let's say major levels. If there are 383 to me and 386, um, so you broke above 386, and then you retested 386, and then you broke under 383, and that would be enough for me to say, okay, the reversal is now imminent because he's done talking. There is no more data, and we're now below two major key levels that we were just above while he was talking.
Right.
And then you could play it all the way down. And I think, and like I said, and ultimately, not saying anybody would ride it down that far, but ultimately rode down to 348. Um, but it comfortably got down to 370 in a hurry over the next few days.
Right. Right.
So yeah, I would say it's the CPI. I think is going to shake a lot of people and probably make them lean one way or the other, especially if it comes in a little bit cooler. If it comes in cooler and you get a dovish J-Pow, I think you have a multi-day rally before everybody kind of realizes that the Fed funds rate's going up. Now, if you have a cooler CPI, a low Fed funds rate, and a dovish J-Pow, that's where you're going to get that huge blow off at the top. I don't foresee that happening, but again, it's important to know it. So yeah, I mean, It's just play it light and don't be biased to one side. And that's King Bear telling you that, which pains me to say, but just doesn't. I will say this only one time on video for Monty, but he was right in that the one thing we all know for certain is we don't know where we're going for certain. And so unless you have data and conviction, um, which I believe this week can provide you that because there is not a major federal economic event until the end of the year or until the beginning of the year. I think you can actually have some sort of a trend created here. And like I showed that 1 month chart, we have not been in a trend and we've just been chopping for a month.
Yeah,
And
if we come in cooler and we get a bullish J-Pow, we're getting our Santa rally. So
yeah, I mean, without question,
yep,
it's just, as much as it would pain me to ride that all the way up, I do like money as well, so I will ride that up. And it also provides a better short opportunity for bears looking at the next thing. So if you really are ultra bearish, the best thing you can hope for is that you're flat cash going into an event and they ride it up because you're going to get a much more attractive contract with a lower VIX.
yep,
So it's just important to know what you're sometimes, and then when you're tanking, it becomes a little bit trickier because the VIX is going to rise, so those contracts are going to get more expensive. So you have to know for certain that the move that you're going to be in, if you're going to be in it for more than a few minutes or a few days, that is the right move because the minute that VIX can turn on you, it can get double. It's a double whammy, right? So yeah, I mean, there's not much more I can say, but just I would not anticipate Monday being anything more than a flat, possibly green day. I know that's not popular right now, FinTwit, but if you look at a 30-minute RSI, it has room to be neutral. 4 hours neutral, 1 hour is neutral, daily's neutral, and in these big events, especially CPIs, you just tend to go in neutral across all the charts. So if the 30 is close to oversold, you're gonna get a neutral into the closing of tomorrow. So I think you could see a possible flat to green day tomorrow. I don't
yeah.
anticipate anything major. Unless, and we won't ever know this, but unless CPI is leaked. There was a time, I think it was, if you go to the daily trend line, Monty, if you go to the 1 year daily, I can tell you where we leaked, where everybody thought we leaked actually. It was the last time we tested the trend line up. So the yep, it was about
August.
a few days later or maybe it was September. Yeah, September. Yeah, just somewhere in there. It's because the CPIs always come out like the 13th, but it was the day. Oh no! I see where it is. Go back
CPI came out the
further.
14th of September because my birthday was the day before. I remember.
Yeah, I think it was actually in May or June where that big gap down is.
Yeah, we had here or here.
Uh, yeah, there.
Okay,
Yep.
yeah, got you.
You see that big gap down on the 10th. That was the day before CPI, and then they confirmed it on the down that it was hot. So yeah, that's always in play, but the likelihood of that to me is slim. But
Yeah.
always good to know. Um, so yeah, I guess I'll open up to any questions, Bonnie, unless you've got anything else.
No, I'm good. We don't have anything in the chat so far on this side, so
Okay. Um, I'll just kind of go one by one. If you want to post your question in the chat, go for it. If you want to verbally say it here, Nader, do you have any questions? Oh, Mr. John Wick, or is it not John Wick? Any questions? I don't think he ever figured out. Anyway, RJJ questions. Rookie, any questions? All right. Yanni, any questions? Cool. That works for me. Anybody else got any questions? Just post on the chat and we'll do our best. But yeah, that's all I've got. Mine. Nice job.
I appreciate it. Hope everybody is safe this week and look forward to making a bunch of money the next couple of days.
Yes, sir. All right, man.
See y'all.
Bye.